All right, so the consensus is we're going to see a pause here. Nobody's expecting the Fed to change the rates. Really, all eyes are on Jay Powell's news conference. What are you expecting? Hawkish tone, neutral tone, dovish tone, and how does it impact the markets?
I think that the markets are expecting the Fed chair to lean a bit more dovish. But our view really is the Fed is in a very difficult position trying to, simultaneously deal with adverse shocks, both with respect to growth and inflation that could be coming from the tariffs. And our view is, unfortunately, with inflation remaining well above target and the upside risk around inflation from tariffs, as well as the fact the Fed is really trying to underscore or reconfirm its commitment in terms of fighting inflation as well as its independence, it's going to be very hard for the Fed to prioritize growth over inflation. So I don't think this Fed is going to be, I don't think the Fed chair today is going to be able to send perhaps as dovish of a signal as the markets would hope. The markets are looking for over 3 rate cuts this year. I think it's going to be hard for the Fed to deliver that.
I was talking to some people. I have a CNBC Pro story out, talking to some people, including Keith Lerner from Truist. He's expecting a cut sometime in the summer. So a lot of expectations that a cut is on the way. But I want to go back to what you said about inflation. The headline PCE, was 2.3%. It was just a tick above the estimate of 2.2. You're saying that's elevated? That's too high?
Well, we're moving above, we're still above target. And with tariffs, the risk obviously is to the upside. And the Fed has recently, obviously in COVID or post-COVID, made a mistake waiting too long to raise interest rates, citing that they thought the uptick post-COVID in inflation would be transitory. It's hard for the Fed, therefore, I think, to risk making a policy mistake again. In the face of upside risks that we all recognize that come from tariffs, I think it's hard for the Fed to sort of look through that and attribute any increase in inflation to tariffs again as transitory, risk making sort of the same policy mistake 2 times in a row. And I think that's what's led them to a bit of this wait and see mode. They need to see, I think, more information on how tariffs will impact growth and inflation before moving forward. I think that, for the Fed right now, that with inflation expectations also elevated, very different than what we've seen before. It's just really important, I think, to make sure that they reaffirm again how committed they are to ensuring inflation doesn't, move higher above target.
Michelle, can I get a really quick answer from you because we're almost out of time? But our Fed survey, Steve Leisman does a Fed survey. 53% of respondents they believe a recession is on the way. At the same time, we're starting these talks with China right now. How does the Fed parse all that? Is there a way that they parse all that or consider that? And Jay Powell is certainly going to face a lot of questions about these things.
Yeah, we've only got about a 30%, a little less than 30% chance of recession. And the bottom line is, I think the Fed just has to watch and wait. That's, there's a lot of moving developments. It's a very fluid situation. And I think that's what keeps the Fed in this kind of waiting mode, maybe much to the frustration of the markets.